the weakening in the labor market is going to be a positive for gold. We get the FOMC meeting also in December. There's a risk that the Fed won't cut. I think they will cut. It's a mistake. They should hike. But all that is going to be a positive for gold. And you want to front run that. You want to be in gold before the Fed makes a move, not after. This is another time I'm going to pound the table and say, don't wait till Monday. Buy more gold at Schiff Gold this weekend. And buy silver. It's right back below $50. There's not going to be that much longer where you can buy silver below $50. And you may never be able to buy gold below $4,000. But right now, it's below 4,100. So it's pretty damn close to the floor if that's 4,000. Gold held up pretty well, as did silver, although both gold and silver got hit hard overnight, although they paired those losses. Gold was down back below, or not quite. Gold didn't get below 4,000. In fact, it never did. It was down about 40 to 50 bucks. But it was always above 4,000. And in fact, it closed the day down about $14 at about 4,062. So holding like a champ at the $4,000 level, still off a bit on the week. But given this mass liquidation, which I think looks like it was liquidity driven, I think people are getting some margin calls. I think there's some forced selling. And that may have been why the gold stocks got hit so hard yesterday. Even though gold was not down very much, maybe less than 20 bucks, gold stocks were down 4% or so. In fact, that's how much they were down on the week about. The GDXJ were off about 4%, pretty much all those losses being clocked yesterday. In fact, we made up some of those losses today. So actually it was a bigger drop, or there were some losses earlier in the week. Silver was down over $1.50 in the early morning hours, got below the $50 level, came back up to about $50 late in the day. In fact, it did trade back above 50 intraday, but it looks like it's settled just below 50. I mean, I'm not sure the exact settlement yet because I'm recording this this pretty soon after the close, so I'm not sure where the settle is. But right now, I'm looking at about a dime below 50, 49.90. But again, holding near $50, that's the breakout level. That's the old double top. So gold and silver holding up very well in the face of all of this market volatility. I think the central banks that have been buying gold all year are going to buy more next year. And a lot of central banks that haven't been buying gold, they're going to start because they can see how successful it's been with all the other central banks. The Bitcoiners were saying that all the central banks were going to have to race to buy Bitcoin, right? That was going to be a Bitcoin arms race started by the U.S., but everyone was going to FOMO into Bitcoin. It's not Bitcoin, it's gold. Right? The central banks that have been buying gold are the winners. And in fact, now this year, the percentage of central bank reserves that are in gold is now higher than U.S. Treasuries. And this is the first time that's been the case in a couple of decades. And so the central banks that already made the decision to buy gold, right, they're doing great. And I think that's going to result in bigger buys of gold by those banks. But now other central banks that weren't buying gold realize that they need to buy it because they're getting left out. The FOMO is not about Bitcoin. It's about buying gold. And so you're going to see that, but you're also going to see private investor demand, I think, in 2026, like we've never seen, because people are going to look back at 2025 in early 2026 at the spectacular returns in gold relative to equities, relative to crypto, right, relative to everything, and people are going to get invested. And again, Morgan Stanley came out and said we need to adjust the 60-40 portfolio. We're going to cut the bond allocation in half and replace it with gold, which again shows they don't view gold as risky. Otherwise, they would have reduced their equity allocation. They reduced their bond allocation. They said sell half your treasuries. That's where the risk is. Get out of half your treasuries and put the money into gold. So this is a big deal. This is a game changer for the precious metal when it's finally being rightly understood for what it is. It is the real safe haven. In the past, when people were worried, they bought treasuries. Now they're going to buy gold because the real risk is inflation and dollar debasement. And you have no shelter from those risks in U.S. Treasuries. In fact, you're at the center of the blast. That is the worst place you can be. If you are afraid of inflation, If you are afraid of the dollar going down, you can't take refuge in Treasuries because all Treasuries are IOUs for dollars, but in the distant future. And so if the dollar is losing value now, the one thing that's worse than having a dollar today is getting paid a dollar in 10 years or 30 years. So how do you hedge that? You buy gold. And that's what more and more people are going to be doing. So you're going to have a lot more competition in 2026 for the central banks. See, this year and last year, the central banks didn't have to compete with private investors. In fact, private investors were selling. Americans were foolish enough all last year and most of this year, they were selling their gold to the central banks and they were happy to buy it. But next year, I don't think you're going to see net selling. You're going to see net buying from private investors, both institutional and retail. So now instead of buying from the public, the central banks are going to be competing with the public to buy gold. Well, where's all this gold going to come from? We don't really mine that much of it. So it's going to come from a higher price. The only way everyone's going to get filled on their gold is if everybody pays a much higher price, which is why I'm continuing to urge our clients at Schiff Gold to get ahead of the curve, keep buying, and don't worry that $4,000 gold or $50 silver seems expensive. It only looks expensive compared to where we were, but compared to where we're going, it's going to look real cheap. So you want to buy it again. I'd buy over the weekend again. This is another time I'm going to pound the table and say, don't wait till Monday. Buy more gold at Schiff Gold this weekend and buy silver. It's right back below $50. There's not going to be that much longer where you can buy silver below $50. And you may never be able to buy gold below $4,000. But right now, it's below 4,100, so it's pretty damn close to the floor if that's 4,000. But, I think the whole thing is all BS because it's just going to be revised. But apparently there were 50,000 or 119,000 jobs created. There were 4,000 lost, or minus 4,000 in the prior month, but we gained apparently 119,000. I don't believe it. We'll see what happens in future revisions. But the unemployment rate rose to 4.4%. So that's headed in the wrong direction. And the weakening in the labor market is going to be a positive for gold. We get the FOMC meeting also in December. There's a risk that the Fed won't cut. I think they will cut. It's a mistake. They should hike. But all that is going to be a positive for gold. And you want to front run that. You want to be in gold before the Fed makes a move, not after. One of the reasons I think it was very significant for gold, too, is the blow up of Bitcoin, right? And because Bitcoin has been overshadowing gold for years, right? It's been stealing all the headlines, stealing all of gold's thunder. And I know it's been very frustrating to the gold bugs to just watch all the crypto bugs getting rich while, gold was going sideways. And in fact, it was, the years of sideways action. Gold peaked out from its big run from sub 300 in 1999 to 1900 in 2011. From 2011 to 2014, gold really didn't go anywhere because it didn't get above 2000 until 2014. And that was about the peak from 2011. So it was during, that, dozen-year time period where gold holders were frustrated by the failure of gold to make any, new gains, that Bitcoin was able to really steal the show by convincing a lot of people that it was the new gold. After all, look at this spectacular appreciation. Bitcoin keeps going up. Gold doesn't go anywhere, right? So Bitcoin is taking gold's place. It's better than gold. It's gold 2.0. And the markets kept, reinforcing this up until this year. Right. This year, gold is up better than 50%. And I don't know, Bitcoin is down over 5% or something like that. Bitcoin is 85,000 as I'm talking. When I recorded the podcast last week, it was still over 100,000. Bitcoin dropped 10% on the week, or maybe it was, just below. The low today was under 82 before we got a rally back. No, except below 81. Bitcoin earlier this morning got to 80,537. That's on Bitstamp. We were at 126 not too long ago, like a month or something. So you're talking about a 35% decline in Bitcoin in dollars. Against gold, it's 43%. This is a massive bear market. But Bitcoin is far more correlated with tech stocks than gold. And if tech stocks have peaked, if we're going to have a pullback, a correction that's just getting started in tech stocks, the bear market that is already well underway in crypto is going to get a whole lot worse. In fact, it was crypto that broke first. Crypto was a leading indicator of what was going to happen in other risk assets, because Bitcoin is the riskiest asset of them all, and all this crypto, right? Because it's all nothing. It's just all pure hype. And in fact, I mentioned this, and I've been pointing the weakness of the crypto-related stocks, which have been obliterated. MicroStrategy is down 70% now. It was down, I think, 15% this week, but it's down 70% from its high a year ago. In November of 2024, following the election of Trump, it had a big spike, but it's now down 70%. But all of these crypto stocks are getting decimated. In fact, the worst one that I've seen is Nakamoto, symbol is NAKA. This is a Bitcoin Treasury company that was launched this year in May, and it was launched while I was at the Bitcoin conference in May, 35,000 people. And one of the hot topics was buying into Nakamoto, because the guys that run that conference are the ones that were behind Nakamoto. And of course, it's Nakamoto after Satoshi Nakamoto, right? And it's a Bitcoin treasury company, which means it's nothing, right? There is no viable business model for Bitcoin treasury companies. All they do is buy Bitcoin and hold it. I mean, what kind of business is that, right? Anybody could buy Bitcoin. I don't have to invest in a company to buy my Bitcoin. If I want Bitcoin, I could just buy it. I mean, it's all a bunch of nonsense. But this stock came out and it was over $30 a share, $30 a share in May at the conference. It closed today at 44 cents. I mean, basically, it's a zero. If you put your money into this company, you basically lost it all. And it's not even, a year, like half a year. You've lost everything, right? I mean, sure, if you got 44 cents left out of $30, I mean, that's nothing, right? And obviously, this is, I think, the worst example I know of, but more are going to follow. I think all these companies are going to go out of business. And I think MicroStrategy is going to be trading at a discount to its Bitcoin any day. And that's going to put MicroStrategy out of the Bitcoin buying business. It won't be able to buy it anymore because it won't be able to sell stock and generate a positive Bitcoin yield. And the word yield, is kind of deceptive. It's not really a yield, but he was able to increase the Bitcoin per share when he could sell his stock at a premium and then go in and buy to the market and buy Bitcoin, which helped prop up the price. It was all this buying by Michael Saylor. In fact, last week, he spent over $1 billion, almost $1 billion rather, buying Bitcoin, and his average price was $102,000 a share. It's not even a week later. Last week, he blew almost $1 billion at 102, and it's at 85. Now, God knows how much Bitcoin he bought this week. We'll find out on Monday when he posts on X how much more Bitcoin MicroStrategy bought. But his average price now is probably about $75,000. Bitcoin is $85,000. He's barely up. I mean, he's got a minimal return. He's been buying Bitcoin for 5 years, and he's got about a $10 or a $10,000 profit on his cost basis. He's up like 13%. I mean, if he'd have bought anything else, he'd be better off. I mean, imagine if he had bought gold. Imagine if every time MicroStrategy went into the market and bought Bitcoin, they bought gold instead. I mean, they'd be way ahead. He'd be much better off. And of course, had he bought gold, and if he wanted to sell it, well, he could get out. He could actually realize the profit. But there's no way MicroStrategy can realize that small 13% profit in Bitcoin because they would crash the market. He's trapped. But the significance of this is that the Bitcoin trade is over. And, if it was gold's failure to perform that was the impetus for Bitcoin, here you have 2025 where Bitcoin is down, right? And who knows how much lower it's going to be by the end of the year. But Bitcoin is getting killed, and gold is having like its best year since the 1970s. So I think a lot of the people that threw in the towel on gold over the last couple of years to buy Bitcoin, they're realizing they made a big mistake, and now they're going to go back to gold. And in fact, all these Bitcoin guys keep saying, zoom out, look at the last 5 or 10 years. They're irrelevant because most people who own Bitcoin today didn't own it 10 years ago. those returns were irrelevant to their actual experience. There's it's a song, right? What have you done for me lately? Well, if people are asking, what has Bitcoin done for me lately? Hadn't done anything but lose the money. Meanwhile, they missed out on a huge gain in gold by buying Bitcoin instead. And so I think in 2026, you're going to see a lot of people that are going to be trying to rotate out of crypto into gold. Of course, there's not going to be much to rotate out of because the market's going to implode. So most of the money is just going to disappear, right? It went into the pockets of the people who sold the Bitcoin. They've been selling Bitcoin for years. The old OGs and the whales who got in at much lower prices years ago. They're the ones that benefited from the big run up, not the people who have been buying it recently. But also, I think a lot of the institutional money that didn't even buy Bitcoin, one of the reasons they didn't get into the gold market was because they were hearing all this hype about how Bitcoin is going to replace gold. It's the new gold. And they probably thought, well, why should I buy gold? I mean, it's going to be replaced by Bitcoin. So even if they weren't buying Bitcoin, all of the Bitcoin hype may have discouraged them from buying gold. But gold is going to emerge as the winner. It's slow and steady wins the race, right? The tortoise versus the hare. Gold is going to emerge triumphant from 2025 with this huge performance as the air is coming out of the Bitcoin and the crypto bubble. I really think that there's only one hope that Bitcoiners have to stop this implosion, and that's a government bailout, a U.S. government bailout of Bitcoin. Now, of course, they wouldn't frame it that way. What they might do is Trump might come out and say, because of this big drop in Bitcoin, we're going to buy the dip. We're going to use this opportunity to fill up the strategic Bitcoin reserve, right? If the Bitcoin, lobby that bought and paid for the Trump campaign, if they can convince Donald Trump to buy this dip on behalf of taxpayers, right, which he's really just screwing the taxpayers over. But if the U.S. government, goes into the market and doesn't just buy Bitcoin, but indicates that it's going to buy a lot more, right, to get people excited about front running the trade. Absent that, I just think it's a one-way ticket down, and that's going to be great for gold.